Hi, midwives, my baby catching friends. Welcome back to the Midwife's Bookkeeper. I am Trevana Parker, the Midwife's Bookkeeper, and I want you to know that it is my mission to help you save time, money, energy, and sanity on your journey by offering you bookkeeping services and business advisory services. So, if you're a midwife, whether you have your own practice currently or you're working for someone with the dream of opening up your own practice, this video is for you because today we're starting a series called Money Basics Every Midwife Needs to Know. Very important. It is not my goal to turn you into a bookkeeper or into an accountant. That's our job. And any bookkeeper that you may already have, totally fine. But I am a firm believer in having financial 101, bookkeeping 101, turning all clients into good consumers of bookkeeping services. I think it's really key just to help you to maintain your practice, to avoid burnout, and even to just build something sustainable for your family, something beautiful for the mamas, the papas, and the babies that you serve. So if you want longevity in your business, you're going to have to understand finances. So let's go ahead and get into it. I don't want to keep you, I don't want to take a lot of your time. Hopefully, the videos in this series will be short because I know you're very, very busy. So today, our topic is why profit is not the same as cash flow. And I want to talk to you about that, just kind of break it down a little bit, and then explain to you why it's super duper important. All right. So profit, we're going to talk about the things that show up on the profit and loss statement, things that show up on the balance statement, the balance sheet, and then why you need the statement of cash flows to reconcile the two. Now, profit and loss, we've talked about this before. I'm not going to get into too much detail, but just know that the profit and loss is a statement that will tell you your business sustainability over a period of time. So ideally, you will be checking your profit and loss statement every single month. If you have a bookkeeper here, she should be sharing this with you at least once a month. Once a month, but you can look at it quarterly, you can look at it annually, but it's going to tell you your profit. It's basically the financial gain that your practice has. If your revenue exceeds your expenses, you're going to have a profit. If it's a loss, it's a loss, hence the name profit and loss. Essentially, it's the money that you have left over after you pay all of your bills. You have your salary, you have other bills, you have your utilities. And it's important because it will help you to reinvest in the business for growth. It will also help you to, if you need capital, banks want to see that you have a profit in your business. Now, there are different types of profit. We're not going to go into any detail in any of those. There's gross profit, there's operating profit, and there's also net profit. We're going to really be focusing on net. Just think of net when we talk in this video, but I'm not going to go into any detail in any of those. Just know that profit shows your overall financial performance. Now, your cash flow, part of it is it's your bank account. If you look at your bank account, cash flow basically shows your liquidity at a specific point in time. And your liquidity is basically the free flow of your cash and your ability to how swiftly you can change an asset of yours into cash. Now, this is affected by a number of things. We have what's going on the profit and loss, but we also have things that are on the balance sheet. So, for example, um, well, before I get into that, let's just say that your cash flow monitors what actually comes in and what actually goes out. So again, you have your profit and loss, you can have your balance sheet. Now, there are things on your balance sheet that are not going to be shown in your profit and loss. So for example, you do universal billing, you're waiting for an insurance reimbursement. You have with your universal billing, you will get a client in. She's a great fit. You charge her $6, $7, $8, $9,000, maybe even more, depending on what region of the country you're in. And uh, she's a client. It shows up in your revenue, but she's not paying right now, or she may pay a down payment and then she's on a payment plan. The payment doesn't come through as far as cash flow until she actually makes these payments. So cash flow is what actually comes in and what actually goes out. On the flip side, you may have an invoice from a vendor of yours, and you may put that in the books that this needs to come out, and that will show on your profit and loss, but it won't show on the balance sheet because you have not paid that yet. It won't show up in your bank account, rather. It won't show up because you haven't paid that. So your cash flow tracks actual money in and money out. And what you need to do is have that profit and loss, that balance sheet, and then reconcile those two with the statement of cash flows. Another thing that's going to be on that balance sheet that's not going to be in the profit and loss are going to be your loans. So you have loans on the balance sheet as a liability, but the payments that you send to it are not going to come out on your profit and loss. The payments are going to go toward the loan to decrease the loan balance. And the only thing that's going to show up on your profit and loss is the interest payment. So you have to reconcile these two every single month. Every single month, your bookkeeper should be sharing this with you because a lot of times business owners think that they're doing very, very well, and they're really not. So your cash flow shows you how well you will be able to pay your bills today at this very moment. Okay. So let's go ahead and just talk about, reconciling these two a little bit more and why why they can be a little distinct. So the first thing we've already kind of touched a bit on is the timing between accounts receivable and payments. Well, it's overall timing, 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 timing. Accounts receivable, we've already talked about accounts receivables when you get the revenue. The revenue shows up on the profit and loss, but it does not show up as cash flow, but it sits on the balance sheet. Another thing that will sit on the balance sheet would be inventory purchases. So you maybe, and it's not so common inside of midwifery where you have this huge inventory monitoring. Um, and that's why with some of my clients, I just do what we call an inventory expense. I just kind of expense it at the onset because they're not really tracking their inventory. However, ideally, you would have your inventory tracked in such a way as to where the inventory comes in, it sits on the balance sheet as an asset, and it's not expensed until someone makes a purchase toward that inventory as cost of goods sold. But again, I know you have like the Nona tea, you might have IV therapy, you might have some essential oils and even some vitamins, but generally, not sure that most midwives will be heavily tracking their inventory, but that is something to know. Then there are capital expenditures, your assets. You may have a car that's solely for the business, especially if you do home births. It's solely for your business. You may have a hearing screening machine. Those are going to be assets that are going to show up on the balance sheet, not on the profit and loss. They're going to show up on the balance sheet, and they're not going to be on the profit and loss until the items are being depreciated. Depreciation is a slow drip campaign where it shows you this was bought at this price, it was worth this. Over the years, it's now only worth this. But again, that's slow drip, and that ends up on the profit and loss. Unless, of course, as a side note, bonus information, you expense it in the first year. With Section 179 of the IRS code, your bookkeeper or your accountant should be able to tell you a little bit more about that. But that's just a side note for a totally different video. Again, if you want to learn more about that, just leave that in the comment section and we can, Lord willing, make a video about that. Then your loans. Suppose you didn't buy your car outright or that hearing screening machine right out. You're going to put that, that's going to be on the balance sheet and you're going to have to pay those. And again, when you pay toward that, the money doesn't show that if you pay $1,000 toward this bill, that's not going to show on your profit and loss statement. Maybe the $179 that you paid toward the interest portion of it is going to show up over there, but everything else is not. So that's why you need to reconcile what's happening on the profit and loss with what's happening on the balance sheet, and that is cash flow. Those two, profit and cash flow, are not the same. They're not the same. They're different. And so a business needs both. However, a profit is going to let you know your long-term viability. Are you able to get customers through the door? Are you able to build a business with, name recognition or referrals? Are you able to get customers through the door? But your cash flow is how you decide how you're going to function day by day. Not only do you need to get customers through the door, but you need to keep the doors open, and that's the lifeblood. And of course, as I said, sometimes your cash can be tied up in your inventory. It can be tied up in accounts receivable. And so looking at your profit and measuring that as your business capabilities or your liquidity is not accurate. You need to monitor your cash flow. Again, accounts receivable, insurance delays, cash flow management is critical. And I said I was going to tell you why this is important. It is important because you can have profit in your books and no money in your banks. Small practices can fail if they have profit and no cash flow. Many businesses have closed doors even though they had great profit and no cash flow. And that's why it's important. It's important for you to monitor it. If you want to work with pro-life bookkeeping to see if we can help you to monitor your cash flow, separate your profit, have those statements for you on a monthly basis, anything that you need, just hop on over to prolifebookkeeping.com or check out the midwifesbookkeeper.com. Those two, they will lead you to the exact same place. You can scroll down to the bottom or click any of the buttons that will lead you to the bottom of the page where you can go ahead and schedule an appointment with one of us, well, with our team rather, and we can see if we're a good fit and to work with you, where we will do your bookkeeping, we do business advisory, and all things for baby catchers. So I hope this information was good for you, even if you have your own bookkeeper. Just I hope the information was valuable to you. Again, if you have any questions or any comments, any topics you'd like us to explore, please leave them in the comment section. And while you're down there, like the video, subscribe to the channel, share the video, and hit the notification bell for more updates. I think that's it. You guys have a great day. God bless you. Bye now.